What if you could build wealth using life insurance the way the top 1% of the wealthy do? Well, in this video, in this live, I'm going to uncover how women can use life insurance not only to protect their loved ones, but also to build financial independence. And I'm going to share some surprising strategies to close the wealth gap and take control of your financial future. Okay. And so now, most of the time, when you think of life insurance, your first thought of it is to think of it as just, paying for your death, paying a death benefit, right? But life insurance can be a financial asset for you to use during your life, just like an IRA or a mutual fund. And so these life insurance policies, they allow you to build cash value over time and then provide you access to that cash value. And so in some cases, you can take a withdrawal, and in others, you can borrow against the policy. And if you do it right, you can avoid a tax liability too. Okay. Um, and so in this live, I'm going to be uncovering once again how women can use life insurance to not only protect their loved ones, but also build financial independence. Okay. And so if you are new to me or to the channel, my name is Katrice, and I am a licensed health and life insurance broker, a paralegal, and your wealth architect. And I help women entrepreneurs and professionals to grow, protect, and secure their finances and build a financial legacy that they can be proud of. Okay. All right. And so, first off, before I get into how you can use life insurance to build wealth, we first got to understand the wealth gap, because women historically have been paid less than men. Okay, we've made less than men. We've been treated as subservient to men. Okay, um, and so for every dollar that a white man owns, women overall own just 32 cents. And then when you even break it down any further to Black and Latina women, it's just a penny. Okay. So it's hard to pin down exactly how big that the gender wealth gap is, because one, a person's wealth can change over their lifetime, and so age can skew the results. But also is that when wealth data is collected, it's collected at the household level rather than the individual level, meaning that a lot of women's household wealth data is typically mixed in with a male partner. Okay. Um, One thing that I do like to remind all women um, is that if you, there's nothing wrong with having shared resources with your spouse. Okay. There's nothing wrong with that. However, you need to always have, I personally feel like women should have control of some type of control of their own finances, that you do not need to mix all of your money in with your spouse, because and sometimes women don't even know what's going on with the household finances. And so should your husband pass away, should you get a divorce, um, should your husband get sick and he can't work anymore, or something happens where he can't even communicate with you anymore, then you're kind of left up the creek without a paddle, so to speak, and you don't know what's going on. And so you definitely want to always have access to not only the commingled finances, but have your own money set aside so that should something happen, you're not just looking crazy flat out and not knowing, you know, what am I going to do, especially if you have children, especially if you have children. Um, and so, one thing that you want to always take into account is having a life insurance policy in your name that you own outright. Okay. Um, Now, a lot of women tend to have less knowledge about personal finance than men. And in a 2022 study, US women correctly answered 45% of financial related questions, compared to 55% of men. Okay. And so becoming conversant in this subject and achieving a sense of financial well being are closely connected. Okay. And so a lot of women don't meet with a financial advisor versus men, and they just allow their husbands to, or their male partners to handle everything when it comes to the finances, and then hope and pray that they're going to do right by them. Okay. And that is not a strategy that I would recommend for any woman to depend on. You need to always be, have knowledge of your finances. You need to know what's going on financially. Okay. Um, and so when it comes to building wealth, what's talked about in mainstream is stocks and crypto and you know, ETFs and things like that. And while those are great ways to build wealth, they are also very risky. Um, and that's why life insurance is something that isn't, it's not talked about enough, and not enough women tap into the power of life insurance, um, because quite honestly, you know, it's been thought, life insurance is thought of as only to cover, to pay out when you die, and it's not really thought of as being something that has living benefits. Even though, you know, people are talking about it more, it's still not something that is utilized as much as it should be. Okay. And so when you're shopping for a policy, life insurance policy that is right for you, you want to make sure that you are choosing a policy that can serve as an asset. Okay. And so you should be looking at policies that have cash value. Now, um, which would just be term policies. I mean, not term policies, whole life, or universal life policies. Okay. Now, there's nothing wrong with term life insurance. Okay. There's absolutely nothing wrong with it. However, it does not have that cash value attached to it. So it doesn't really serve as an asset, and it just provides a death benefit. Now, term insurance is good for mortgage protection. It's good for things like mortgage protection. So if you were to die, you know, because with term, you can get a large amount for relatively cheaper than it would be to try to get that same amount with whole life. And so you can get a large amount term, and if something were to happen to you, it could cover your mortgage, right? And it could cover any other expenses that you have. So there is value in term life insurance, but to use it as an asset, then you definitely need to be looking at whole life and not term. Okay. Um, and so life insurance is just a contract between an individual and an insurance company, and the insurer agrees to pay a designated beneficiary a sum of money upon the death of the insured person in exchange for regular premium payments made by the policyholder during their lifetime. And so, there's term life, like I just went over, that covers you for a term. And then there is whole life, which covers you for your entire life. Okay. Whole life is the most common type of permanent insurance. And in addition to the death benefit, you have the ability to accumulate cash value. Okay. And then there's universal life. Universal life, it functions like whole life, and it allows you to grow an asset by occurring interest over time that you can borrow against. Now you have to keep in mind that with universal life, that the premiums aren't set in stone, so they are subject to change. So there is that flexibility there, and plus they also are linked to an index. Well, that's index universal life. It's linked to an index, and so it grows cash value at a higher rate normally than whole life. So those are two assets that you can use. Okay. And so now there are several ways that you can use life insurance um, as an asset. Okay. Um, you contribute to the policy over the years, then you earn the ability to borrow against what you have saved. Also, all of your earnings are growing on a tax deferred basis. So you don't have to pay taxes on it. Now, I went over this in detail in my last masterclass that I did earlier this month, where I talked about tax. I talked about you using life insurance, index universal life, and how you can grow your wealth tax free. And so, if you missed that masterclass, there was no replay, but I will be offering it again in August. And so, as the time gets closer, I will talk about it more. But um, here are some of the ways that you can maximize your life insurance. Okay. So you can take a loan out from the policy, which you can borrow against the cash value. Now, you do need to read the fine print, and there is interest that you do pay on the loan. However, it's tax free. So you're not paying any taxes on the loan. Now, any balance that is not paid off by the time you die, then that balance will get deducted from your death benefit. Okay. Now you can also withdraw funds from it. Okay. And so rather than taking a loan out that must be paid back, you can also simply just make withdrawals from the policy that are yours to keep. Okay. Now, if the withdrawal amount is great enough to dip into the investment gains, then you will have to pay taxes on that. Okay. And any monies that you withdraw, it will not be paid out to your beneficiary because your withdrawals decreases the value of the policy. Okay. Now, when it comes to index universal life, you can withdrawals are tax free. Okay. Now, you can also use your policy as a collateral for a loan. Okay. And so, in some situations, you can use your life insurance policy as collateral for a loan, which can make it easier for you to get approved or to perhaps get a better rate on the loan that you are taking out. So, essentially, your life insurance policy is serving as an asset to prove your trustworthiness as a borrower. Okay. Now, keep in mind that if you die before paying it back, whatever you still owe will come off the top before your beneficiaries see their benefit. Okay. Now, there's also the accelerated benefits, which are called like living benefits. And so some policies, they do enable you to receive benefits during your lifetime should an unexpected or extreme medical emergency arise, such as cancer, heart attack, or kidney failure, any type of terminal illness. Now, most policies with this option allow you to withdraw anywhere from 25 to 75% of the policy's value. And then if you would like to surrender the policy. It's also called and cash it out. Then pretty much you're just canceling the policy. And when you do this, you get back the cash value that you've put in, less any fees your insurance company may charge. I don't recommend this, however, it is available. And so you just definitely want to make sure you read the fine print and understand it, um, because in some cases the fees can be quite high. The surrender charge can be quite high. Okay. Um, So here are some other ways that a lot of ways that the 1% uses their in their policies uh, to build their wealth. One, they use it to diversify their retirement income. Nearly a quarter of women plan to use life insurance for supplemental retirement income. Um, and so you can take withdrawals or loans during the policy, during your retirement. And so that's just another stream of income, and it is tax free. They also use it for education expenses. And so if you are saving for your children's college costs and you have a funding gap, you can use your policy's cash value to help cover that gap, which could possibly minimize the need for the kids having to get all of those costly loans, and being saddled with student loan debt, because it's not fun. Ask me how I know. And plus, life insurance offers more funding flexibility than other alternatives such as 529 plans. And so, and you could also use your policy's cash value to pay off your existing student loans or to fund other schooling needs like private school. Okay, if you want to put your kids through private school, you can use life insurance, the cash value from your policy to do that. You can also use it um, to transfer wealth to your children and your grandchildren, which a lot of people they use it for that purpose as well. Okay. And so now, if your goal is to maximize how much you want to leave to the next generation, cash value insurance can play an important role in your wealth transfer plans. Okay. Because cash value life insurance is very flexible, you can use it to help protect generational wealth. You can use it to reduce your estate tax liability. You can use it in equalizing inheritance. And so you can list out who you want to have the beneficiaries and the percentage that you want them to receive from the policy. And you can also use it to help take care of those in your family who have special needs. So if you are the parent of a special needs child, you definitely do not want to name them outright as a beneficiary. And so you can put it in a special needs trust for the benefit of your child. And then you can have it set up to where a trustee, you can have a named trustee, and then they can oversee the asset distribution for you. Okay. All right. Now, something that's very, very important when it comes to your life insurance is the beneficiaries, naming the beneficiaries and making sure that they are up to date. You always want to make sure that the beneficiaries on your financial accounts and your insurance policies are up to date, because that is how your assets are going to be distributed once you are no longer here. Okay. And so if you have your husband or your ex-husband, or ex-boyfriend or somebody who you no longer speak to listed as a beneficiary, and you did not go and update it, or you updated your will and not the actual beneficiary designation, it doesn't matter what your will says. The insurance company or the financial institution is going to go by the beneficiary designation. And so if your ex-husband is listed as the beneficiary, but you done got remarried and you want to leave everything to your current husband is not getting a penny of that the life insurance proceeds, it is going to go to your ex-husband or whoever you have listed as the beneficiary. And so it is very important that you have that updated. Also, do not list children as beneficiaries. Anybody under the age of 18, I strongly do not recommend that you list a child as a beneficiary because they are not of the age of majority. They cannot enter into a contract, and so then they're gonna be appointed a court appointed guardian, financial guardian to oversee that. And honestly, you don't even know if that person's gonna do right by them. Just because they court appointed, it don't mean that they're gonna do right by your babies. And so you need to, if it's somebody that you trust that you can list as a beneficiary, and then list the child as a contingent beneficiary. You could do it that way. I've seen people do it that way. um, it's just, if the child is like 16, 17 years old, listed as a contingent, you know I personally feel okay with that. And then having somebody over 18 as the beneficiary, somebody you trust to, for that reason. But then, if once the child reaches 18 and you're still alive, you need to go back in and make those changes so that the money can go to your actual child because they're no longer, a minor. But do not list children as beneficiaries because that just opens up a whole nother can of worms. And the money that you had set aside to make sure that your babies would be okay, you don't know if your babies are going to be okay or not. Okay. So you always want to um, be very, very careful in who you list as the beneficiary because that is what is set in stone, and that is what the insurance company and financial institutions are going to go by. Okay. All right, so here's a few practical steps to get you started on choosing the right life insurance policy based on your individual financial needs. The first thing you want to do is to assess your current financial situation. Once you do that, then you want to go ahead and see how much coverage you're going to need. Once you assess your financial situation, then you see, okay, how much coverage am I actually going to need? Now, this may change over the years, which is why you always want to, do I say either 1 to 2 year reviews, annual reviews, um, to make sure that everything is still going the way you want it to go, because you always need to make adjustments. You get married, you get divorced, you have a child, you buy a home, you purchase a car, you take out a business, you may want to look into getting um, key person insurance. There's so much that goes into it with all the life changes that can happen over a lifetime. And so, assessing your financial situation isn't just a one and done thing. It's a constant, right? Which is why you always need to do policy reviews. Okay. And not just with life insurance, but health insurance as well. You should be doing policy reviews every single year. Those are very, very important. Um, and then the best time to get life insurance is when you're young and healthy, since premiums will be less expensive compared to when you're older. However, if you don't have life insurance now, then the best time to get it is now, um, when you know you need it, which is now. Because just as sure as you are born of a woman, you are going to die. And so, you're going to need life insurance. And while a misconception that a lot of people have, that I am really working to change, that the mindset of people, especially women, is that you need to have life insurance, period. Um, because GoFundMe's and fish fries are not that's not the move, right? You don't want your family, they're grieving for you, and then they have to also try to figure out how they're going to pay for your your funeral, pay for your burial. And so you don't want to leave that burden on your family. You want to make sure that you have taken care of that. Okay. And so that's what I have for you today. This was a real impromptu live. I didn't really, I just decided to go live today because I was supposed to do a uploaded video, but I wasn't feeling the best. But I was like, I want to get some content out today. So I was like, let me just go live. So I just decided to talk about this here real quick. Just a reminder that life insurance is a very underutilized wealth building tool that women should, it's a very passive way to build life insurance. And while I am all for stocks and crypto and forex, and ETFs, I'm all for all of the wealth building tools that are out there. I also feel like every woman should have a life insurance policy building cash value as well, because it is passive and it is something that all you got to do is pay the premium every month. You don't have to look at any charts. You don't have to study the markets. You don't have to be stressed like, oh my God, Donald Trump said something crazy and now the stock's done dropped and I done lost money. No, not at all. You just pay your premium every month and know that you are building cash value. And so it is something that I truly believe that all women should they should really look into. They should have a cash value building life insurance policy that they own, that is building them cash, that is growing their wealth passively. Okay. And all right, so like I said, that's what I have for you today. And so if you have made it this far in the live, thank you so much for watching. My goal is to always provide practical, actionable financial advice to help you to take control of your finances and your future. And I so appreciate you being here. The channel has hit 150 subscribers, and so thank you to every single one of you that has subscribed. We've also hit 30,000 views, almost 31,000 views. Thank you so much for everybody who has watched, subscribed, liked, comment. I so appreciate you. This channel and this information is for you. And so thank you so much. Now, if you would like to book a consultation with me to discuss your insurance, retirement, or estate planning needs, then you can do so using a link in the description of the video or on the channel homepage. If you found value in this live, go ahead and give it a thumbs up and share it out with someone who needs this info. Also, subscribe if you like the content that I provide on this channel. All right. And so remember, the way to secure your financial future is to protect it now, because no one is coming to save you tomorrow. Have a good one.